Good afternoon, traders. Welcome to our regular weekly outlook. This is where we use wave analysis to look for trades that may be potential good trades next week. So we would look at all the majors. We'd look at some of the crosses. We'd look at gold, silver, oil, maybe a few, I don't know, maybe S&P 500 and a few more charts. We'll look to see what are the setups for next week, the potential direction we expect the chart to go. Now, two things before I start the webinar itself. Let me just get rid of these two things, and then we'll start. First is risk management, money management. I'm going to be very short on it. There is only one single thing any trader in the world has total control over. That is how much money you can lose. Remember that, not how much money you can make. How much money you can lose. You have total control over that. You can decide how much money you're going to lose, how much money you're going to spend. When you walk into the shop, you can decide, I'm going to spend $100 or $200 and that's it, I'm out of here. If you're having a problem with that, you don't go shopping. If you're having a problem with how it's putting your stops where you think the market is no longer doing what you expect it to do, the structure is no longer valid, whatever you're trading is no longer working, you have to say, that is it. This is where I want to exit, and I will exit there. You don't leave it open and start praying and hoping and calling all the traders and calling everybody and said, please help me. I'm in this trade and it's not going in my direction. I'm 50% down on my account. Well, then you're already breaking your account. If you don't put a stop, you're risking your entire account on the trade. You're saying, I'm willing to lose my entire account on this single trade. And you can do that. Remember the Swiss? You know how many people lose their entire account on a single trade? Buying the Swiss where the support, where they thought that support would be, that the Swiss National Bank will keep their promise. And you make a nice 5% risk you thought, you put in a trade and you said, okay, that's it, and you didn't put a stop. And you woke up you watch the next hour and you're out of the trade and without an account. Now, in some cases, the broker may not respect your account, and there are stops, and that may be one of the cases, but in most cases, they will. And even if you have a small slippage, at least you have an argument with your broker, is that I had a stop there, right? If you don't have a stop, you have nothing to argue over. You have nothing to say. Most times in very nice, normal trading, your broker will respect your stop. So here is the deal. Use a stop. And the only way you can use a stop the right way is if you understand what the market is doing. If you understand where whatever you're doing, selling or buying, is no longer valid. Right? That it will no longer do what I expect it to do, so I have to get out. And that means you have to understand the structure of the market, what it's doing, when this structure is telling you it's going to go up, and when this structure is telling you it will go down. That's what you need to understand. And that comes to my second point. If you want to be a trader, you have to learn to forecast the market. You must know. You are actually forecasting the market, whether you know it or not. Right? And it's misleading when some traders come and say, well, I don't forecast the market, I just make money. That's extremely misleading. It's actually a play to naive traders, to new traders who have no idea what they're thinking. And, oh, this guy's making money, I want to be with him. It's extremely misleading. Because every single trader in the world makes a forecast, and that is what he trades, his forecast. You're buying the euro because you think it is going to go up. You're selling the euro because you think it is going to go down, and that is a forecast. You can believe it or not, that's a forecast. You made a forecast that it's going to go down and you sell, or it's going to go up and you buy. We're not discussing what is the reason for your forecast, the bias for your forecast. We don't know. Maybe you look at the news event. Maybe you flip a coin. Maybe you're a structure trader. Maybe you're a wave trader. Maybe you're a support and resistance trader. Maybe you're anything. But once you're using whatever you're using that instrument to make a forecast. So you are making a forecast. Traders who say they don't forecast are probably not trading. In real life, they're not trading, because if you trade, you're forecasting. That's simple. If you put a trade on, you just made a forecast. That's it, full stop. So don't allow yourself to be misled and to be fooled by people. You better learn to forecast. And what will be an advantage in your trading is if you have a tool that is a forecasting tool that works. So the reason you want to find a tool that allows you to make forecasts and has very high advantage in forecasting is because you will be making forecast. There's no if, you will be making forecast. And if your forecasts are good, you will probably make money. That's it. So there's a lot of misleading things people do out there, and they tell it like they like, only pro traders. I hate when people say, especially on these small sites where we are all retail traders, I'm a pro. If you're a pro, you're probably Warren Buffett. You should be in Wall Street trading. We're all just amateur traders here, basically. We're trying to make an extra buck tomorrow. We're trying to make a small trade out of something that is technically the trade. We're not big pro traders. Pro traders are not supposed to be in trading view. So when people like to say, well, I'm a pro trader, I'll make you a pro trader, all of that, I'm like, come on, knock it off. Wake up. You're trying to make a couple $1 like me. You're no pro trader. Pro traders are trading on Wall Street probably. Whether they win or lost, if you're trading there in millions of dollars, you're probably a pro trader. You're trying to, make your couple dollars. Stop making the nonsense, but only professional understand this, and I'm the pro trader, and I'll make you a pro trader. And all those hypes, I just hate them. Literally, I hate them. It's a waste of time. I don't know where people get those stuff from and why they insist on using them. I really don't know. We just help you to become a better trader. If you come to me, I say, we can help you to be a better trader than you are today. Would you be one of those super professional traders? Maybe. I don't know. I don't know your talent. I don't know your ability. I don't know your skill level. I don't know your account size. But maybe you become one of those good, very super good traders that become a professional trader in your life. Maybe you remain an amateur trader like us, and you learn to trade, and you make some money, and you make good money. But you'll still be pretty much a retail trader, right? And that's okay. Maybe you just enjoy the fun of trading. You don't lose a lot of money. You just make some money, and you win some, and you make some, but you enjoy the group, you enjoy the fun, you enjoy everything around it, like going to the casino. Maybe that's your aim. Maybe you're bored and you don't know what the hell else to do, and you do that. That's okay. Everything is okay. Once you're not losing your account with me, it's okay. Whatever your purpose for being here, it's okay. So don't allow people to mislead you into these nonsense. They say, especially if you're seeing people on TradingView, we're all the same level on TradingView. We're retail traders. I don't think there's any big pro traders sitting there watching TradingView and watching charts, right? So let's just be modest and honest about it. Stop this hype and this nonsense. I just hate it. So now all of you who heard what I said and don't like what I say, you can go troll me, because that's what they do. They go open accounts and start trolling my charts. Go do it. It's okay. I don't even answer to those trolls anymore. Got to get over it. Let's go now. Let's do what we're here for. Sorry for that thing, but just to make sure, because new traders get caught in that, and then they come and they said, well, I'm in this problem. I'm like, why you do that? I mean, like, why you guys listen to those stuff? At least do a little reading before you start trading. You don't get to join my group if you don't have a year experience. That's just a fact. Because you would not understand structure if you don't have a year experience. It's just that easy. That's why I don't take people who don't have it. People call me, I have 6 months. Okay, spend a couple. You know how many people I send? I say, okay, go to babypip.com, learn this, read the book, do this, get a capital, then come back to trading. Guy called me, oh, I just made money. I saved money up for your trading, for your course. I want to take it. I was like, no, you don't want to do that. You save money up just for my course. That's not what you should do. You need to have a capital to trade before you can take my course, and it will make benefit to you. So you pay me the money, you take the course. What happens now? You have no money to trade. It's of no benefit to you, right? And it's a waste of my time and your time. That's the whole problem. That's why I don't take traders like that. People get angry sometimes, but please, if you don't have the finance, I waste my time to train you because you're in here for life, and we really spend a lot of time training you. Believe me, if you're in my group, you will know that. These guys really, not only me, the entire group is there to help. We give a lot of time to people to train them to make sure they're in the right direction. And then you don't have money to trade. It's just wasting your time, right? So let's go. So let's go. Dollar index. If you were in the last webinar, remember we said there was going to be a pullback. Watch this pattern. It will make a pullback and then it's going to go. I believe we are in for the go now. We made the pullback, put in the 1 hour. This is a breakout here for a buy setup. That means all our trades that we were looking for the sell setups are going to happen. So let's go Euro. We did all the daily the last time, so you guys are going to look at them. We're in the middle of nowhere in the Euro. The Euro has a lot of options right now because it's in the middle of nowhere. It's breaking all the trends, the uptrend, the downtrend, and it's just hanging in the middle of the year. So I think we will have to leave Euro, give it some time to give us a sense of direction. But I am more biased to the downside, which means if Euro breaks this structure, I'll allow it to come back all the way and break this structure. Make a flag here, and then we would look for a sell setup. This would really be a good sell setup. Euro, I posted, watch this. We anticipated this. I actually posted this, watch for this upside. It's just corrective structure for now. So if you traded it and you took the trade, you just make sure you get out for profit because it's corrective structure. I think it's going to go down. And the reason I think Euro will go down is because I'm looking at the other trades like the Aussie and the New Zealand. Pong, on the other hand, could go up. And don't be surprised if Pong is the only one going up against the market, which means dollar index goes up and Pong goes up. Because I've posted this chart quite a while back. And remember we said potentially they could have made a third move down to the bottom there, a third impulse, and then go back up. They didn't. They actually did pull back, but then they break out. So that means the third impulse is not valid. You're not going to get it. We're looking at this as an uptrend now. So on the daily, let me go back. And the reason we were looking for that is, remember from the last time I said this correction is not enough. That this thing will go up, and we were expecting it to go up. So now we're already looking at the uptrend here to about the 382 and maybe even the 50 before you get another down move, right? This one is actually going up now. So we have a trend to the upside. If you take everything out, we have an A wave, a B, and we're going up for a C wave, which is trending up because you got an impulse up. You got a move down and you're making a next move up. You can get a pullback and continue to go. So on a 1 hour or 4 hour, if you get a pullback, and you're likely going to get one, right? You're likely going to get a pullback here. You buy. We would look for buy setups. So on the Pong, we would be looking for buy setups, but in the Aussie and the New Zealand and the Euro, we'll most likely be looking for sell setups. That means you want to look at all the Pong crosses, because that could give you some amazing trades. Aussie, potentially this could go up if you look at it in a daily. Potentially this has a chance of going up, but we're looking at it mostly now because it's breaking this trend here. We're looking mostly for at least some more downside and maybe all the way to this low, because it could be a 1, 2, 3 wave structure before it goes back up, or it's totally going down, right? Those are the two options you have, right? In any case, the downside is very valid. So what we look for here is to see where this goes. If you make a flag here in the 1 hour, it's one more up. If they break this stop, we're going to get an immediate reversal, because that will give you a lot of divergence and that would create an immediate reversal to the downside. So on the 1 hour, what you're looking for, two options we'd look for. Perfect 618 sell if it wasn't the fundamental news event that actually drove it up there. If it had gone up slowly, that would have been a sell for us. Right? If this thing had just crawled its way up to that 680, that would have been a nice sell area. So what you're looking for now is what happens here, right? We want it to come down back, make a flag here, and then we will get a sell setup. That will give us a sell setup. If they make a flag right here, it's one more up, one more trade up, but the upside is limited, which means if you buy the Aussie, if you get a buy, and that the buy side will not come within a week or so, because you see when they go into consolidation, it will take about 3-4 days. So if you get a buy setup, it's only one impulse you get and you take your profit. Don't keep the trade. But if you get a sell setup, you can move that to break even and you can keep the trade with you for a very long time. Maybe we're lucky and we get it for a whole week going in the same direction. If we're unlucky, you get a break even trade, but I will take that risk. If I get a sell, I'll keep it. If I get a buy, I'll take my profit. Which one is going to give us? I'm biased to the downside, right? Structurally, I'm downside biased. Same with this. This one will go down. It's just a matter of, is it going to go this week or next week? But it will go down. This structure will break. And you see what's happening in the top there? This structure will go down. So I'm only going to look for a sell on this until it breaks this entire structure. Out of that entire structure, it's not breaking it. So I'm looking for a sell setup. I'm not in the traders yet. I don't have a sell setup. It didn't break today for a sell. So we would look for a sell, even if they retest this top. Sorry. Even if they retest that top there, right? Come back to the top, we will see a fast reversal. We will see an indication that it's going to go down. So this trade is willing to go. We haven't broken the top as yet. So it could start to reverse from where it is right now, right? Now, we don't know that it could go more. It could test the top and come back. So if you're in the trade, remember what I said, be careful. Possibility exists for that. We would like to see it come back down here. And right at the bottom here, I would like to see it make a flag right here. Pull back here and make a flag. This would be my sell setup. I'm not trying to get in the trade too early. I never like to get in the trade too early. Let the trade tell me it's going to go in that direction, and I'll follow it. Right? I don't like to decide that I know where the top is. I don't. And I never assumed I know. None of the strategies that I'm using tell you that that is a top. Right? None of them will tell you that that is a top. Because you will never know. And I see traders who try to do that, lose 5 trades before it eventually starts going down. Well, I'll save my 5 trades and then take the trade when it's going down. Right? I'll keep those 5 trades. Let it prove to me it's going down before I get in it. So it has to come down here, break this, make a small flag here, and then I'll be in that trade to the downside. Structurally, I think it's ready to go. Based on what we are looking in terms of structure, this is very close to going down. Right? Nothing else in this structure is changing as yet to tell us that, you know, you could get an up trade. So we'll be looking for the downside next week. If there is a change in the structure, and there's only one thing that could change that structure, that is a very fast move to the downside here, and then a reversal. This is the only thing that will change the structure and give me an upside view. So first it has to do what? Come down. And if it comes down, I'll be ready for it. Right? This is the only thing that could change the view. If they come down here in a corrective structure and then start to go back up. Right? Like this here. Otherwise to that, it's upside. It's downside. Total downside. Now it may not be finished. We're going to see, but we're looking for a sell setup. Swiss. I think the Swiss, we have it nice drawn out here. I actually posted this one. Your first impulse up, you got a 1, 2, 3, you could get a 4, and you could get a 5, and then you could go, or they're going to break out after the 3. Remember, corrective structures could be 4, could be 3 impulses or 5 impulses, right? And we are not discussing that like we didn't discuss it in the previous sessions, right? This is what it could be. So we were looking for it to see whether it's going to be a WXYXZ pattern or an ABC pattern, and go. Right? Those of you who trade Elliott Wave should know those patterns. Even if you don't trade it, you can read the book. It's good to know a few things about it. And then we're going to look for a breakout. For me now, it would be an advantage if it comes down, but I don't think they're going to come down. We're looking, there's a trade here. There's a small trade there to the upside. Put it in the 4-hour and then the 1-hour. See, this one was a small trade. We didn't focus on this one because we knew the potential for the downside on this one was limited, but the potential for the yen and the downside was maybe it could have gone, right? So that's why we go with that one. This one, we're looking for at least one more to retest the stop and either break out or turn back to the downside. If it turns to the downside, it's a good trade. If it break out, it become an amazing trade because it's going to go up a lot. So the buy here, if you get a buy setup, would be a great trade. You can take it when it comes to the top here, move your stops very close and see if it breaks out. CAD came down also, sell all 3 of them, the CAD, the yen, and the Swiss. We were looking for sell setups and we chose the yen to trade in non-farm pair. We'll see, we're not good at choosing, right? We should have chosen the CAD, but you know, that's part of the game. We should have chosen the CAD business. But don't be fooled by this to be the downside as yet, right? That is just a pullback, and the downside only starts if it breaks this low. If they break out of that low, that will confirm that they're actually going down. which I don't think they're doing right now, right? Because this consolidation is too small. So I would see this as a pullback to probably go up for one more. I'm looking for them to break that top before they go down. This will eventually, this is a corrective structure, but it's a daily corrective structure. You don't trade the daily corrective structure. You trade the parts within the daily corrective structure. So within that daily structure, I think this is an impulse to the upside. So this correction may reverse back up. And if it does, we're going to look in the 1 hour and the 15-minute for a trade. Right? Just a 1, 2, 3 pattern and then go back. They've had that before, 1, 2, 3, and then they went up. So pretty much the same thing we'll look for. Yen, the one we traded, and it's going up back now. So if they break out of this structure, which is what we're looking at. Now, I can't go into the details as we did it in our trading room, but I can tell you that there's a potential for them to retest this top and then make one more move down. Now, there are reasons why we look at the chart that way, and that's something I can't discuss here, but this is what we're looking for because we didn't break the low, so we could be making a 1, 2, 3 pattern, and then we will make an impulse down. This will probably complete the entire corrective structure. It's in a daily, weekly corrective structure. And for that to complete, we need another impulse to the downside. So if they break this top, and I think they could, we would look for a trade to retest this top here. This would be the trade we'll be looking for. We're sitting on the trend line, and both sides are possible every time you come to that trend line, right? It's not a resistant point. Let me just make it. This is not a support and resistance line, or as some people said, break the resistance. There isn't anything like resistance in the chart, right? This is just data collection, and we're drawing it to see where it could go. So if it is going to go, what we're looking for is patterns, not resistance. But we would like to see them clear out of the downtrend, go back up, give us a pullback, and then we look for this here, right? That will likely confirm it's going out of the trend to make this pattern a bigger sideways move, right? Like this one here, for example. You had a 1, 2, and a 3-wave structure. So we'll be looking for a 1, a 2, and a 3-wave structure, and then one more down. Let's see. That is the forecast we have so far, so we'll keep an eye on it. Very possible it's going to happen. So your trade comes in, your buy trade comes in right here. On the break of this 3-wave pattern, you look at it like this. Take off these. That's a break-even trade we had. This was, I showed them the option we were looking for. That was before the news that it could probably make one down and then go back up. So we're looking for this. It's coming out. You wait for it to come out, and then based on your strategy, you look for a trade set up to the upside. If it comes down back, no problem. Once it starts coming down back here again, we'll look to see what it does here, and then we'll decide, do we have a flag for sell or do we have a flag for the buy? Right now, you don't have either. Right? You don't have either. Right now, it's a setup for the upside as it stands here. So we'll probably have to wait and see how it behaves next week and then probably make that decision. But right now, this is a 3-wave structure for upside. So we'll have to see whether they go or not. Euro-Oz. Euro-Oz definitely will go up. It's just a matter of time, and they're consolidating for a long while now. Look how many days consolidation you have at the top there. Very sharp impulse and a long consolidation. They may have some more consolidation here. Eventually, you're going to have your technical head and shoulder pattern, and then you're going to look for the upside. 4 hour, probably want to wait for the break of this structure here. You can put it, you know, some traders may put it like this. Just wait for the break of this and then trade it to the top, and likely we're going to see more upside. I think likely it's going to go up. So this could go up because of 2 reasons. Either the Aussie starts to fall very fast, faster than the Euro, or the Euro to the upside is pretty strong. Right, one out of the 2. Aussie, in any case, we'll be looking at Aussie weakness and Euro strength, and that means this will go up. If they're going down, expect Aussie to go faster. If they're going up, expect Euro to go faster, and that should give us this trade. Euro and New Zealand, stay out of this. We've been staying out of it for a while, if you remember. There's nothing to. It's an incomplete structure, and we still can't decide where it's going to go. Euro Chief, more upside. We looked at this and we're looking for more upside that is going to come tag this top, and very likely we're going to get a big trade down here. So let's look at that daily. 2 options. This is a big, very same pattern I showed you before. 1, 2, 3, 4. We could get a 5-1 before it go, or it could break out from here and go. Right? Those are the 2 options. Once you see a structure like this, it will either give you a fifth wave or it's going to break out, and you would never know which one until it does one out of the two. So for us, I think it's going to come up some more here, and then we'll make that decision: a breakout trade or a down trade. And both of those will be amazing trades. Both of those will be really amazing trades because you're getting them from a very good point to buy or to sell. Structurally, this is going to go up more, either from the low or from there. So keep an eye out. It's at a point where you're going to have a very nice trade, right? It's a short trade to the top. Maybe one more spike, just take out the top and then come down. It doesn't have to, but it could do that, right? Because, yeah, they don't have to go up all the way to the top. This is in a down corrective structure. You have divergence. See that? I have divergence in the chart, and you're looking for this to come back down here. It looks more downside than upside, if you ask me, right? Not that it can't go up, they can spike up, but structurally it looks more downside. So if we'll be looking for a trade, I don't think this is with the downside. This will probably go up first, a sharp move down, a correction, and then we'll all be in that trade going. I'll post this out if the trade shows up. Euro yen. This one is in the middle of nowhere, so we'll leave it. It's an incomplete structure, and it could go both ways right now, just like the yen. It could follow both ways. Euro CAD. This eventually will come down, but first they still have to go up. They still have to climb this way up some more, retest that top, and then we're going to see this down as a 1, 2, 3 wave structure before it comes. So the downside is a little too early. I think they're just going to climb very, very slow back to the top. Not a good trade. Just stay out of it. Euro Pong is giving us what we wanted to. If you were in my early webinars, you'd remember while this was going up, I said, be careful. At some point, it's going to start to come down, right? Because it has to make that wave structure to the downside to give you a corrective structure. See, we know that this cannot be the impulse going up, that you're having a 1, 2, 3 wave structure, and then you'll go up. There is going to be a very, very big trade on this one, as you can see. Went up a little more and then straight down, right? What we were expecting in the chart I posted earlier was that this piece here would have made a move up and then come down, right? That was the expectation for this. This would be the buy if they break out. Well, that buy didn't materialize. It never broke out because we were anticipating a breakout here, go up some more, and then come down back. They just keep coming down. So what you got to do is wait for any pullback. As long as you're under the trend line, wait for any pullback and sell. This one didn't, but we were expecting it back to the line. We didn't get that. We weren't even looking at it for a trade. So if it comes back and it goes back to the line like this, you have a very nice sell setup, right? You got a very nice sell setup there because you have a 1, 2, 3 wave pattern. 1, 2, 3 wave pattern that gives you a sell setup, right? So keep an eye on this. If you trade these charts very often, you can go with that. Pangos, more upside. This is just a short trade. We identify this in our room that this is a short trade to come back here and then go up. We're not looking for downside. We're not looking for Pong to go up. So you want to watch the Pong trade. We're looking for more upside. We're still within this uptrend and it has a lot to go. See, it has a lot to go. I think they're going to go much more daily. This is the daily structure. See how far this one climbs? Slowly but surely, it just kept climbing. We're pretty much doing the same thing here. Slowly but surely, it will climb up to the top. Always making some small corrections and keep going, keep going. There's a lot of buy structure there. Let me just show you some. See, this was a buy setup, and it was going. That was your buy setup all the way to go there. We actually thought they were going to break out. See, we thought that this thing will be breaking out of the bigger structure, right? So it didn't do that. They just give a small consolidation here, a very small one here, a small one there, a small one there, a small one there, and they just give. So if you get the same thing here, you're getting one right now. That's a buy setup. Buy when it comes, right? You don't want it better than that. It breaks out, you're a buyer. Pound New Zealand, this will go up some more too. It's looking very corrective, like a flag right now. If they break, it will be short-lived. They can break this. If they break this, it's going to be short-lived. And then we'll see upside because this whole thing will be correcting itself back to the top, right? Let me just bring this down correctly. and bring the trend down. We're eventually going to get a correction. So you're looking mostly for a three-wave structure, a 1, 2, 3-wave structure, and then the downside. Put it back here. It's pretty flat. It's not going very nice. Very, very flat structure. Kind of a channel. So what I can expect is that they could make a deeper consolidation here. Break out of this structure. Don't jump into the buy immediately, because sell immediately, because you can get a sideways like this and then you get a sharp move up, right? That's very possible. When they start making structures like this for the upside, they make a break to the downside and then they go straight up. It's the way structure behaves. So if you understand how if you're able to read structure, you can see those patterns as they come. So I'm not seeing a big sell setup here, but we are not getting any much for a buy structure as well, right? This is not very much of a buy structure. This was a buy. We looked at this, but it wasn't a good risk to reward trade. That's where you have to be careful, because you'd have had to put your entry there and your stop would have been here, and this is where it stops, right? So that is not a good trade. We saw it and we said leave it alone. I still think you leave this chart alone. It's not giving you good risk to reward trades. When there's a good setup for that, then we'll come back to the chart. Not because you can assume or because you can forecast or because you even have a great idea to understand where it's going to go. You have a trade setup, right? You might not get the trade setup, right? So this one, I just showed you some of these three-way structure that goes up, right? And some of them that are potentially going to go up, 1, 2, 3, and then they go up. I showed you some of them potentially just now that are at the low and they will go up. So you can see how they behave and put it in a 4-hour to see where we are here. All the punk trades are coming back to retest that top. Remember we said that here. By the way, some of my traders were in this trade. I hope they're still in, because they bought here and I told them keep the trade until you hit that top. Magical blue line we're looking at. So this is still going to go up some more. And at that point, we will see whether the entire correction is complete, right? Because this is going to get a very big move to the downside. Right? We're going to see what happens when it gets to that top. It could go higher, or it could stop right there and turn. According to the structure, watching how the structure behaves and watching what pattern we're making, we would be able to tell when it's close to turning. And that would be the amazing trade we'd be looking for. Punk had very similar structure. You can see it. 1, 2, 3. All the punk trades have after that Brexit, all of them have this 1, 2, 3 structure for more downside. Pong yen 1, 2, 3 for more downside. This one I posted a while back. 1, 2, 3 for more down. I've been posting the upside from here actually, right? So watch this structure to make a 1, 2, 3 up. It's pretty easy. You can watch what they're doing and wait for this to break, and it didn't break. It just keep coming down, and then it made it move up, right? No big deal. As long as you understand what the structure will do, you don't have to be in the trade. People's come and trolling. Oh, well, it's going down. Well, yes, it's going down, but I'm not interested in the sell. Right? If you understand what structure you're doing, this thing could be crawling its way down, but you're not interested in this. You're interested in the move up. And if you get part of the move up, the bigger trade, you should be interested in this one. That is what I posted when I posted that chart. So the next big trade what's this now? The next big trade on this chart would be the trade to the downside. That's the next big trade you don't want to miss, right? Remember, this one was a downtrend. It was going up. Everybody was going crazy. And I said, this is a downtrend. You don't want to miss that big trade, right? There's a good reason you don't want to miss these big trades, because they move pretty fast. And if you look at the previous one, sell setup, sell setup, sell setup. This was a sell setup. There is going to be another sell setup in the Pong Yen, and you don't want to miss it. See, you don't want to miss the big one, because it's going to come. That is when this one completes the pattern here. You don't want to miss this trade going down, because it may not be as fast as this, but it's going to be pretty fast going down. Right? Those are the trades that you focus on, the impulses. Trading this little one going down, crawling down, or trolling the charts that, oh, you said it's going to break out, it's not breaking out. It doesn't help you, right? Focus on what the chart is doing. Understand structure. And it did exactly what we expected to do. Take a little longer, no big deal. So watch this trade to go up. Let's go. New Zealand yen, stay out of this. Aussie yen, stay out of this. Swiss yen, stay out of this. I'm telling you the ones we are out of, because we're waiting for a structure that is complete. We are not getting that. CAD yen, stay out of it, right? We were looking for a sell in the CAD yen. We're still looking for that sell setup. It's still actually making a 1, 2 3-wave structure, but it just spiked up there. See that? So if they give us a reversal, then we'd look for this trade here. If it's going to keep going up, we'll have to wait for a 1-hour pullback. That's a sharp move up, so we'll have to wait for a 1-hour sideways move, and then we will get a trade to the upside. This would give us a short-term trade. You take this trade, you take your profit. If it breaks, we get a trade to this level, right? Right now, it's not the best trading. You can see if you look at it in a 1-hour, it's not going anywhere fast, right? These are not very fast moves to trade. So when it's doing that, now it's giving us fast move. This is the first indication that it could be giving us a fast move to the upside. We'll be willing to look at it and take trades to the upside. Aussie, New Zealand, everybody is looking at this one. We are actually in this trade. I told my traders to take it off a break even. If they didn't get the break even, they will get the break even when it comes back to this level. We actually bought it. You saw when we bought it when it made this pullback, and the stop is here. And the reason we did that, I don't think they're going to break that low, right? But this morning we thought that they were going to come down some more, and they did come down some more. Now you can see the reversal is probably going to happen. So if you're not in the trade, if you're in the trade, you may still want to take it off a break even. If you're not in, because we'll put a different entry. If you're not in the trade, you want to put an entry order somewhere above here. Maybe Monday or Tuesday we'd look for an entry on this thing to the upside. This one is definitely an up trade. I don't think they're going to break that low. And that is where we put the bet in. That is why we decide we're going to put that order in to see whether they break the low. And the risk to reward in this trade is how much? 8 to 1. Yeah, that's the risk, because we're looking for the target at the top there, and it will not be a single trade. We'll probably add more trades to it if it goes. But we really want to say that if this structure works, we're not supposed to break that low. So let's see if it works, right? So we're going to look for this to start reversing very soon. Maybe next week, this will be a wonderful trade going up. Keep your eyes on it. What you can do is you can wait for it to break out first, a more short trade, let it break out first. It will pull back. You know they always pull back, and then you get into that trade all the way to the top, right? This trade we've been tracking for a long time, and it's pretty much behaving well, except when it goes into consolidation, it takes a very long time. We never expect that, these consolidations are going to be so long drawn out, but every time it goes into consolidation, it takes a very, very long time. So you want to trade it only when it's actually making the impulse, and it's about to start making an impulse. So you want to keep your eyes on that. Silver, it's in a correction, so it's probably still going to be in it. This is a nice small trade this morning. If any of my traders wanted to trade it, I didn't think they should trade it. I warned them it's an NFP, but we're looking for this here. And just maybe it's going to come back here, or it's going to go down here, right? Just maybe. We'll see. It's in a correction. It's not somewhere I'm interested in it as yet, but I'll be interested in silver when it comes back to about 1780, 1750, 17. I don't think it will go lower than 17 this time. So around this area will be the buy zone. We'll be buying again, like we had a buy zone here, right? Remember the next big move in silver coming within that buy zone? And a lot of people thought, well, this guy is crazy, right? That is the buy zone, right? It's a zone where you start buying silver like crazy. And everybody thought, well, he's crazy, right? See that? Amazing. That's how structure works. So we saw 5-wave structure there. We're waiting for it to come back into our next buy zone, which would be somewhere around the 17 here. This would be our buy zone. I don't think it's going to go lower, and then we'd look for that trade up. So let's go. We'll keep an eye on it to see what structure is developing. Gold, I don't know. Everybody's going crazy about gold and trading view. I don't want to post a chart on it because I don't want to get all the trolls involved in it. So watch this. It's coming. It's just a correction. They may or may not break this structure. While silver will have to break this structure, this may or may not break it. It could still go up from here. But you don't want to buy at the bottom because you don't know it's the bottom as yet. Remember I said, those people who buy at the bottom, you get lucky every now and then. And you would know that. I mean, if you're trading, you would know every time you try to pick the top or bottom, you get lucky once in a while and you jump and you touch the roof and you're like, you're the big boss. But if you look at your account, a lot of times it's telling you, you shouldn't do that, right? because you lose about 10 trades before you get one, before the right one comes around, right? Always wait. There was a buy setup on this flag. There was a flag there for a buy setup. Actually, for my traders, I put it as an entry order. You can put an entry order in and sit on that one for the top here, in case it does exactly that. That was the idea. Put your entry order just in case they do this. But it seems like they did exactly that, right? That was an entry order, not picking the bottom, but waiting for it to prove it's going to go up, right? So this is out. Take that out. And wait now to see what happens. If they break this stop or they make a flag here, it's one more up to this trend line. If not, they're coming down back again. And you might not get a trade. This is not a sell setup. You might not get a trade to the trend line, right? So we'll see. Oil is coming up back. That means we're going to make a move back to corrective move back to retest here, and then maybe one more drop. They will retest this low. I think oil is going to go to retest that low before it goes back up, right? We'll have to retest this low. So this move up may just turn out to be a correction, and it may be long drawn out too. And then you're going to get the downside, something like this or something like this. And then you get a downside. So you may have to wait for a while before you get a trade on that to the downside. To the upside, if you trade it, it's probably going to go up and down. Natural gas making a consolidation here too as well. So if it breaks out, we take the trade. If it's coming down short term, you can sell. If you get sell setups and it's short term. We've gone through almost every single one of them. Let me go through two more charts for you guys, and we will call it a day at that. I know it's Friday afternoon. All you guys are pretty tired, right? I can do this 24 hours, right? You have to stop me at some point. Okay, S&P 500 broke out, so you probably get one more impulse up, not a big one. It's going to pull back very fast. Go pull back very fast. It's going very slow. There will be a big downside on S&P 500. Everybody's talking about that it's going to be a big downside, but I think they will come to about this 24, 25 area before that happens. Right, they've already broken this stop, so any point they could start to do this, and you're going to see the big fall. There's going to be a big fall from around that area, so it's too early for that. But keep an eye on it. So we're looking for upside. And Nifty, for those traders who keep asking me for it, a lot of traders. And I've posted this in my chart. I follow it up, and it's still going up, right? We're still looking for that upside, right? So it's going to make corrections, and these corrections are working perfect, right, for the upside. So that's about it. I'll stop the record. Let's take some questions. You guys have any questions? I'll write the questions in the chat, not the Q&A, because in the Q&A only I see it. So let me do the 3 questions in the Q&A, and then we go. You're in Aussie yen buy from that. Should I close the trade and wait for it? No, if you're in the buy, you never close your trade if you think it's going to go more. Just move your stops. Anonymous viewer. Oh, we have an anonymous viewer. You can write your name, don't worry. I'm in the Aussie yen buy, the same trader. Nope, you can move your stops. Aussie yen chart, please. No, you can move your stops. We did the Aussie yen chart for you just now. What else? Is the structure in the Aussie yen gearing towards a sell? Yep. Aussies look gearing towards a sell. I think so. We'll keep an eye on it and see. I'm an Aussie yen buy. Okay, you posted trades so many times. Don't just post it once. I'll come to it. What is a flag? What will it flag a break? I'm not sure what that question is. If you're asking for, are you asking if a flag will break out, or is it making a flag? I'm not sure. RH, you'll have to retype that question. Is the structure in those? We have that question already. How many traders take? How many trades to take per day average? How many good trades you have? It's not how many trades you want to take. There isn't the average. Some days there's no trade, right? Some days all the charts are breaking. You can look at them 20 setups and all are breaking. You don't have to take all of them. The idea is not how many trades you take. I think the concept of trading to many traders are like, how much trades should I take? How much pips should it go on? It's the wrong concept of trading. Your trading should be, how much money am I risking, and how much profit I expect to get out of that, right? That's the concept of trading. You can trade one chart, you can trade one single trade. All your concept should be, okay, if I take this trade, what am I going to lose? What's my risk? So my risk, I'm risking $100 here. If I risk $100 on this trade, where do I think is the take profit on this trade? How much profit would I make on that? $300? Great, I'll take the trade. If my strategy said it's a good setup, I'll take the trade. It doesn't matter how much, because you're not supposed to over risk. You can take 20 trades, you over risk, and you break your account. 3 of them are winning trades, the rest of them just go into the wrong directions and break your account. At 20, you take 15 could be winning trades going slowly. 1 of them reverse, and because you're over trading, you're gone. Right? So it's not about how much trades, it's what percentage of your account you're risking on any single 1, 2, 3, or 4 trades. Right? The concept is different. You have to have the right concept of trading. I think the question is wrong. Is a good question, but the concept of how much trades is crazy. Oh no, because we already decided. That's a good question from Alistair Mullane. You're asking about the Aussie. Why did we move the US yen to break even? We've already decided way before we even take it that structure could be a 3-wave structure for more upside. And that means potentially it may not go very far. You see, those are things we do in our trading room. I'm not supposed to be doing them. Please post your question in the chat, not the Q&A. Right? Because then I have to look both ways. That's not okay. You took on, that's okay. If you Aju is my trade. You see, Aju told you how much trades he took last month, 18. You don't have to take 100 trades every day, right? Aju could tell you that. And Aju is only trading 2 or 3 pairs, actually. He's trading Aussie yen, I know that, and he's trading 1 or 2 more. Basically, you don't have to trade everything. That's not what trading is about. I just post everything because traders trade different things. And if you know the amount of requests I get, if I answered all of those requests to post charts, I'll be worse than the guy who is spamming the charts there, right? Who is posting 40-something charts a day, right? If I start answering to all the requests, I'll probably be like him, spamming 40-something charts a day, right? Just crazy stuff. That's not trading. How do you trade when you have setups on 3 pairs? I choose 3 pairs. If I have setups on 3 pairs, yep, you have the right thing. I choose the best one for risk management. Well said, Tobis. That's it. You choose the best one. If I have 6 setups and I decide I'm going to trade 1 or 2 of them, I split my risk between the 2, and I picked to my best knowledge the best 2. We picked the wrong one today. We looked at the CAD, we looked at the Swiss, we looked at the yen. We said, okay, all of these are going to break to the downside. We picked the yen. Look at it. The CAD is still going. The CAD is still going like crazy. We picked the wrong one, but that happens. That's trading, right? We looked at all 3 of this today, and we said, okay, they're all going to break slightly. Let's put them on a 1 hour. We said this is going to break down. We said Swiss is going to break down. And we said yen is going to break down, right? Which one did we take? Actually, this year. We said yen is going to break down. Which one did we take? We picked the yen, and we got a break-even trade. Look what happened with CAD. CAD is going like, like if you had put your entry order in the CAD, you'll be one happy person. See? So that happens. You pick the wrong one sometimes, but you don't overtrade. That's the point. When we trade the breakout of flag, no, that depends on your strategy. We will not discuss strategy. Strategy is exclusive for my trading room, right? Can you teach us how to measure the consolidation structure? That is exclusive for my trading room. That's actually teaching you structure. By the way, you're in the room. You're gonna learn that, right? Alvin, you joined my trading room, so you will know that very soon. Someday I do. I know all my traders, right? So I'll know you're in the room. What about dollar? The Bitcoin going up? I will look at Bitcoin. I'll post Bitcoin for you guys on Monday. I haven't posted it a long while. Can you teach us how to measure the consolidation? We looked at that already. Yes, me too. Oh, good. Okay, join the tops of Nifty. Joining the tops of Nifty up move creates a converging wedge kind of structure. Can the upper trend line be the target of significant in any ways? I am not sure what you're trying to say there, Tushar. You come back with that question in the trading room, because I'm not sure. You have to elaborate in the trading room. You're in the group, so you're okay. You're taking the course, so you're okay. And I was wondering, does using wave structure in 5-minute charts or 122 for the tick charts still valid? The wave structure is valid on any time frame. The problem is you don't want to trade it on any time frame, because remember, the longer the time frame you use, the more time you have to make that decision. The shorter the time frame, the less time you have to. Let's say you're trading a 5-minute chart. You could be in and out of the trade in less than 3 minutes. One single 1-minute candle could go to your target and reverse before you even have a chance to take profit, unless you had to take profit there. And if it missed your take profit by 2 pip and it reverses, it's going to get to your stop because you're trading a very small time frame chart. The larger the time frame chart, the more time. If you're trading a 4-hour chart, you have about a day or two to make a decision whether you're still staying in that trade or not, right? That's the difference with the chart. They give you more time to figure out what the structure is, to decide whether you want to still stay in the trade, whether you're going to get out, whether there's a changes. You know, you have more time to make those decisions. You can go to work and come back and, you know, be trading a 4-hour charts and don't worry about if it's going to take you out, because your stop would be so set structurally that you will need at least 3 or 4 candles to take you out. That's 12 hours or more, right? So that's the whole point of trading higher time frame. USD ruble, yeah, we can look at that for you. You 1 second. Let me take some more questions and then we'll look at that for you. Do I close my trades at the end of a wave 1 if you sell at the start of wave 1? Well, you're very, very good if you catch the start of wave 1. That is almost impossible to do. And if you can tell where wave 1 is going to end, you're actually pretty good at it. You can do that, but that is not that's a hype that wave traders could give you, right? We buy when we at the what you buy at the bottom of wave 2, and you go and you at the bottom of wave 2 you buy, you trade wave 3 up to the top, you close it to the top of wave 3, you buy back at the bottom of wave 4. If you know where those bottoms and tops are, that's the whole point. And most traders can't even tell where a wave is on the chart, much less to know where those tops and bottoms are. So that's a hype that is crazy. That's not how you trade. You should have a better strategy than buy at the bottom, sell at the top. That is a, you know, that's a saying that goes around. Buy at the low and sell at the high. The problem is how many traders you show a chart and they could tell you where the lows and the highs are. Hindsight, they will all say, oh well, this was the low and that was the high. You give them a chart that is active, even the people who say that, and said, show me where the low is going to be now. It's coming down. Tell me where the low is. And you would lose about 20 trades before it actually hits the bottom and make a low, and then start to go up. Remember the Aussie chart? One trader was picking top, picking top, picking top. After 5 trades, he eventually got the one to be the top. Right? So, you know, you don't know where the top and bottoms are. Don't assume you know that. You have to have confirmation that it's actually ended. That's how we trade. We trade with confirmation in our room that this structure is actually ended, or it's going for a deeper correction. One out of those two. If the structure is totally ended, we're in a good trade. If it's just a correction, we can get a break-even trade. That is what happened to the yen today. It looks like a correction. We got a break-even trade, and we anticipated that. We don't know where the top and bottom is. You make that assumption, you know, and you lose your account pretty fast. Yep. Good question, Thomas. I made a huge yes, because I was risking small. That was non-farm payroll. I was in the trade in a little profit already. I was in 3 trades in the euro, all of them below 1% or 1%, one below, and all of them went like crazy. They went 10 to 1, 15 to 1, 20 to 1. That is the movement that they went. Actually, it was 4 trades I was in. 3 in the euro and 1 I think was in another euro pair. And they all went very crazy because this was a non-farm payroll, and we had a falling wedge, and I was very confident that wedge is gonna go. And it went and it went and it went. Now, if you're in 1% and it moves 15%, that's 15% profit for you. You follow? And if you're trading above 100,000, you got a message, right? Or you want me to explain in more details? You see, so that is how you make it. And you can do that. That's the point, right? You don't have to trade a lot to make that. Some people could put a trade on and make, depends on your account. Look, we have Sherman in the room here. We have Sherman. Sherman is, you know, if you look at the money Sherman is posting out, he's making, you can think this guy is minting money. But Sherman has a huge account. I have a trader. I'm just gonna mention what you showed me, but I'm not gonna mention your name so you don't have to identify yourself. But I have a trader who's trading a $1 million account. And when he showed me the account, when he took the course, and he was saying, when he showed me the course, after he took the course, he was showing that he was 35% up. Right? He makes a lot of money. But if you look at how he trades, he's trading very small, 1, 2, 3 standard lots. He's not very few trades. I look at his account because he showed me very true trades were like 10, 20, or 30 standard lots. They were pretty small trades, but he's making money because he's trading small. He's risking small and he's winning good. Right? You don't have to trade. And this is not hearsay. I saw the account. He literally gave me access to it, right? So, you have to, it's about risk to reward. People want to get rich fast. That's not how it works. How to pick the MACD divergence at the right point. That's a whole week of training in our classes. Oh, Jeremy's asked, we don't look at reversal candles. I don't know which candles are reversal. We look at structure, more than one candles. Does one get into your, how does one get into my course? Add me to Skype. That is the only way. You give me a Skype. I don't want to talk too much about it, so I'll just type my Skype here. Just Skype me and then you'll know. By the way, a course is starting on Monday, so if you want to get in, you have to Skype me today. I will be here for the next 2-3 hours, and that's it. It will be closed. You can join my course, but you can join anytime. You can join the group, but you will have access to the course only on the next course that comes up. Today is like the last day you have to pay. After that, you're gonna, today or Saturday, and then I'll still get you into the room. So my Skype is, let me just make it a little bigger for you guys. MANGAL 457. Just add me to Skype. I'll give you all the info, and if you have questions, I'll answer them there. Let's talk about charts here. Let's see what more. Just people who are looking to learn, not to trade. Why would you learn if you're not trading? If you're learning just because you're working somewhere, we had that. I had a guy who was working at a bank. He was, I think, just starting to work at a bank or some trading desk or something like that. But he took the course. I don't know if he's in the room. He's from Singapore. He took the course, but he took it just for learning, just for the knowledge. Yeah, I don't think he's an active trader. I'm not sure. So yes, you can. If that is your situation, why not? You could take the course. Nothing is wrong with that. But when I said people who don't have the money, I mean people who are trading a $1,000 account, a $500 account, a $2,000 account, and then they come and they said, "Well, we've saved up, and I have only a 1,000." And I'm like, you probably want to reconsider. You want to think about it more. Yep. The reason I think Pong is going to go up is because of the structure itself. Next course starts on Monday. Today, tomorrow is the last chance to pay, and then I'll get you in the room. After that, you can still pay and join, but you will have to take the next course. You will have access to the classes I do. You will see all the webinar. You get all the recordings, all the stuff. But the practical part, which is the important thing in our course, it's the practical part that we do, the training that we give you. Any tips on why expanding triangle could break both ways? Oh, that is if you're pretty sure if it's not an expanding triangle, then it breaks both ways. It's a long topic. I'll probably do that one day on another course. So everybody's tired now, so we'll just run it up now and call it a day. What else? If you have a huge risk to reward ratio, do I take partial profit in between? I don't know. That's a strategy you'll have to decide on yourself. I wouldn't advise you to put the huge risk to reward. You mean if it has a huge risk to reward to go? Move your stops. I wouldn't say take partial profit. I'd say move your stops. Because you click partial profit now, and 5 minutes after there, a huge, the candle, it just moves in your direction, a very huge move. You're going to beat yourself up for no reason. But if you move your stop and it takes you out, you want to move the stop partially, move the stop partially. It takes you out, you're not worried, right? The market does that. It's not your fault. Right? You made a protection, and it took you out. But if it goes, you're happy. You're one happy person, right? If you can make this course, when is the next one? I have no ideas yet. If I manage to find time to do one this year, it's going to be in November. If I don't think we're going to manage to have the time, it's going to be in January, February. Right? I don't like to take off partial because you're saying I don't have confidence this thing is going to go. My strategy is not working. And, I rather move my stop and let it take me out. And I know I'm wrong, right? It's normal. You're wrong. That's it. It took your stop out for break even. You're wrong, right? I didn't say take off part of the profit when the yen spiked down. I said move your stop to break even. That's the whole thing. You're wrong. just accept it and move on, right? But you didn't lose anything, and that's great. When you're wrong and you don't lose anything, that's amazing. So, okay, guys, I'll see all of you. Take care. Have a wonderful weekend. See all of you later. Thank you.
Bye, Neil.
Okay, bye-bye. Okay, guys, thanks for being here. We'll see all of you later.